Thank you for taking the time to come here and taking the time to log in to join us in this 1 hour plus sharing session, right? As the objective here is we talk about HR, payroll, and recent updates on the labor-related regulation, as well as personal income tax. All right. So a bit of context, right? It's not so important. You all know who we are, and you know who we are as well. But I would like to share that we have our consultants who will be presenting, and hopefully they will do a good job in sharing the updates. But what I want to start off, right, is in the last 6 months, there has been a lot of, 4 months, there has been a lot of changes in Vietnam in relation to the laws, right? 1st July, effectively, we see new law on VAT. We did a seminar on that. And effective October, there will be a new law on corporate income tax. Effective 25th October, if I remember correctly, right? And then now, during that period, there have been updates in the law, in the employment law, as well as health insurance law, and we expect the new personal income tax law also to be issued and effective from 2026. So you will see that Vietnam in 2025 has gone through a bit of transformation, right? And most of this is to make the tax environment more competitive, firstly, attract more investments, as well as to address the digital e-commerce business. Okay, so what for HR related, you will see on the slide that there's been update on social insurance law. It's been 9.5 years since the last update, right? So this is effective 1st July 2025. Then the health insurance law has been amended effective 1st July 2025. And we have the employment law. Employment law is effective 1st January 2026. So in Vietnam, in addition to the labor law, we also have a law called employment law. Okay, we share what are the updates on that law later. And finally, the more anticipated one that most of us would like to see is the update on the personal income tax. Personal income tax affect everyone who earns income, right? And it's been 17 years since the last personal income tax law has been issued. So based on the draft that we see, right, is kind of positive. And hopefully, once it comes into effect next year, everyone will have more money to spend, right? And less money to go to the government, okay? And of course, hopefully all of you will be carrying nice bags, nice clothes next year. But save your money, okay? Save your taxes, save all your tax savings. Okay, what we'll cover here, right, is two parts, right? On social insurance law, amended health insurance law will be presented by my lovely Ms. Nyo. Right, and of course, then we talk about employment law and personal income tax. Then, other than that, we'll just share a bit on these share schemes, right? ESOP, employee share ownership plan, right? How it will be taxed, and of course, for this specific regulation, there was an update in 2024. But since we are talking about HR, payroll, right? We thought it would be interesting to share on his ESOP plan as well. And finally, my colleague will share about HR budget planning and transformation. So that is to lay the understanding of what we'll be speaking in the next 1.5 hours. All right. And as we go along, what we love to see is questions at the end. Okay. So as we go along, if you have anything that's unclear or any thoughts that you have, right, do share the questions, because we speak is interesting to you, but when you ask question, it's interesting to us. So give and take. Okay. Right. Without further ado, right. Ms. Yong will talk about social insurance and health insurance updates. Thank you.
Thanks to Kevin for your introduction. So now we will take a closer look at the updates in social insurance and health insurance. This part is really important because it expands for the coverage and participation rules. Firstly, let's see the new for let's see what is new for Vietnamese employee under fixed-term labor contract. As you can see on the slide, if the contract duration from 1 month to less than 3 months, before 1st July 2025, only social insurance is applicable. But under the new law from 1st July 2025, both social insurance and health insurance are applicable. So what it means? It means for short-term employee from 1 month to less than 3 months, you must contribute for social insurance and health insurance. And this change ensures for short-term employees will receive more benefit from social fund and will be treated more equal under the new law. And the second new point is substance over form approach. And this is also applied for Vietnamese employee. So under the new social insurance law, they will look at the substance. If you have any service contract or agreement, but the substance has the remunerated employee-employer relationship and provide service under supervision and or management by party over the other, it will consider a labor contract and subject to social insurance, health insurance contribution. So the authority will look at the substance of the contract that you sign with the company. So if you have any agreement that say anything but the substance show the pay employment relationship and under management by a company, it will be considered a labor contract and subject to social insurance, health insurance contribution. And another new point is for part-time employee. This is the first time the new law regulates about part-time employee. And this is very common group in many businesses. Are there any company here with a part-time employee? No? Yeah, yes. If yes, this is something you should pay attention to. And the new regulation from 1st July 2025 regulate that if the part-time employee that have monthly income reach the minimum threshold, they need subject to social insurance and health insurance. Now the minimum threshold is 2.34 million dong. So what is contribution base for part-time employee? The contribution base will based on actual monthly income and ranging from min threshold to max threshold. Currently, min threshold is 2.34 million dong and maximum threshold is 46.8 million dong, equal to 20 times minimum threshold. For example, if you have any part-time employee sign contract with a company from 1 month or more, if in October they receive 5 million dong for income in October, so we need to report to social authority 5 million dong. In November, if the income is 10 million dong, then report 10 million dong. But in December, if the income lower than 2.34, for example, 2 million dong, so we need to report to authority to reduce, decrease the report. That means will not contribute social insurance and health insurance for December. Regarding the contribution rate, it's the same as full-time employee, which is 8% for social insurance and 1.5% for health insurance contributed by employee, and 17.5% social insurance and 3% for health insurance contributed by employer. Then another new point is change in Vietnamese management and supervisory personnel of the company. Previously, the law only focused on business managers who receive salaries. I focus about in a business. So from 1st July 2025, the law expand to cover it more, include controllers, representatives of business capital who receive salaries, business managers, controllers, representatives of business capital who do not receive salaries. So you can refer the business manager according to corporate law here. And to check whether if the management in the company without salary, they are subject to social insurance and health insurance or not. As a result, they will receive the benefits under social insurance and health insurance law as salary employees, include sickness allowance, maternity leave benefits, and retirement pensions. This is applied for the management. And you might wondering, if they don't get paid, how exactly do they contribute, right? Before finding out the contribution rate and contribution base, we want to note regarding the social insurance and health insurance contribution that the employee, the management can make the payment themselves or get support from company, a part or whole amount. For the contribution base will be based on self-declared monthly income, ranging min threshold to max threshold, currently 2.34 million dong and max threshold is 46.8 million đồng. So, can we choose the contribution amount every month? The answer is no, cannot. At least 12 months of paying social insurance and health insurance at the selected base. Participants can change the base. And the participant can choose to pay directly to social insurance authority on a monthly, 3 or 6 month basis, or via company according to the current payment term. For contribution rate, total of 26.5%, with 25% for social insurance and 4.5% for health insurance contribution. Okay. The above is the expense regulation regarding Vietnamese employees. So now we will go to another new point for foreign employees. Previously, for foreign employee to participate social insurance and health insurance, we had to submit work permit and contract duration from 1 year or more to the authority. But from 1st July 2025, under the new law, the company just submit the labor contract with duration more from 1 year or more. No need to submit work permit to social authority anymore. And this is quite interesting here. Under the old law, if the foreign employees reach retirement age, they must stop contributing social insurance and continue with health insurance. But from 1st July 2025, if they reach retirement age, they must continue social insurance, health insurance contribution until the contract ends. And the next new point is employees with multiple contracts apply for Vietnamese and foreigners. So the social insurance and health insurance priority order will be as follows. The first one will be business manager, controller, representatives of business capital who receive salaries. This is the first priority. The second is full-time employee. The next one, part-time employees. And the last one is non-salary business manager. So, for example, if you hold full-time employee at company A and part-time employee at company B, you must contribute social insurance and health insurance under company A. And what is for one role and multiple enterprise? Please look at the slide. For social insurance, it will be contributed under the first enterprise, and the same for health insurance. But the accident insurance is a part of social insurance, 1.5% for contribution. And this will be contributed on the company, the employee work. And accident insurance cover accident to work and occupational disease. Okay. We have done with expiring coverage and participation rules. So now we will research on reference level. Earlier we mentioned the number 2.34 million đồng quite a few times. So let's see where this number comes from. 2.34 million dong is currently a reference level, which officially replaced for minimum base wage starting from 1st July 2025. The reference levels based on the CPI, economic growth, state budget, and social insurance fund, and it can be flexible and adjustable by the government. Maybe probably earlier next year, we will have the new reference level. Yes. And that is all for my presentation. We will come to the next presentation by my lovely college Miss Tripat.
Yeah. Quite a bit on that, right? I just want to do a quick recap. Okay. Now, in relation to what we have is expansion of social insurance for people that work part-time, people that work a short period of time, right? So that's the first one. The other one that's a bit confusing to some of the probably audience is this one, okay? Business manager. So in the law, it says business managers, how it's defined. If we go back to the law enterprise, this is what business managers are, right? Those who sit on the board, those who are the president of the company, right? Members council and so on. So the old law says if they receive a salary, right? It even includes sole proprietorship. If I own a business, right, and I cannot give myself a salary, okay? So the law, in fact, in my opinion, covers people that work for themselves, right? And the law allows them to contribute social insurance, okay? So that was the old law, which is here. Okay, then with the expansion of the law, right? So they are covering Vietnamese individuals who hold position in a company. It could be a members council. It could be a president of the company and they don't receive a salary, right? Could be people that acts as the controller of the company, okay? Or they are director of a company. So they don't receive a salary from the company. They may receive a fee, a director's fee every year, or some work or some whole position for a company that doesn't do well, right? They may not receive a fee. So in other words, the social insurance law is saying, right, these people are, or this individual, they are, they should have a social insurance benefit to cover them, right? In the event that, I mean, to take them under the social insurance coverage, okay? So now, this point here is those that receive salary and don't receive salary, right? So both have to contribute social insurance. It is not voluntarily, it is mandatory, right? Either the company or the individual has to contribute the social insurance. However, based on this hierarchy here, where is that? Based on this hierarchy here, right? If I sit on the board of a company and yet I am a full-time employee of another company, then I don't need to contribute. So this part here would basically impact individuals who don't receive salary, who are not full-time employee. and who are not part-time employee, right? So this only apply those individuals who maybe are retired, right, and have nothing much to do, right? They sit on the board, and then they should get social insurance coverage. Okay, so that's what I want to share in this part here. Hopefully, I make it a little bit clearer and not a little bit unclear. Yeah, and we shall have Miss Thủy to do the next part. Thank you.
Good morning, everyone, and thanks Kevin and Nhung for such valuable information. And now I will take you go to employment law updates and personal income tax updates. In the employment law, I will talk about the data management, scope of participants, and contribution rates. Let's start with the data management. This is an important area that, but we often gets overlooked. In the past, the law requires employers to archive data of employees, but the law hasn't defined what the data information we should retain. So in the new employment law, they has listed them out. And this will give both employers and authority a standard to track the employee's profile. Yeah. And the next one is the scope of participants. The current employment law said that the employees with labor contract duration from 3 months have to participating in unemployment insurance, but in the new law, they regulate that from 1 month, the employees can contribute to the insurance, unemployment insurance. Yeah, that means employees with labor contract from 1 month to 3 months can contribute to the the unemployment insurance. And the next one, for the first time, the part-time employees with labor contract duration from 1 month can contribute unemployment insurance. This is brand new. And the new law specific this group, the business managers, controllers, representative of business capital who are entitled to receive salaries. Yeah, only who receive salary can join the unemployment insurance. And this will enhance the protection of in case of job loss, especially with one who work part-time or in a flexible arrangement. Okay, move to the next part. Is the change in the rate, contribution rate. The unemployment insurance fund is now contributed by 3 parties. The first one is employers, employees, and the authority. The employers and employees are now at fixed rate at 1%, and the authority could go up to 1%. And so the new law add more flexibility to the employers and employees when all can go up to 1%. And this will ensure the fund safety, but still support employers and employees in a difficult context like the COVID-19 pandemic. Like what happened in the COVID-19 pandemic, they can the authority can reduce the rate a little bit to give the employers and employees a breathing room while the economic downturn. And next is the regional minimum salary. Before 2020, 2022, this salary change every year, but after that they have changed about every 1.5 years. So we have used this salary from July 2024 and haven't changed until now. From 1st January 2026, this is the proposed figure, and this is the difference, as you can see here. And when the minimum salary goes up, we have to pay attention to the salary of your employees, especially ones who has salary who have under salary under this rate, and for our salary in this rate. One more attention is that you have to review the cap base for unemployment insurance contribution. Okay, we have shared all the social insurance, health insurance, and unemployment insurance, and this is the overview of statutory insurance, that including all of that. And we have here SI is social insurance, health insurance. This is accident insurance, which is included in social insurance, and unemployment insurance here. And from the 1st of January 2026, this group have to contribute all of this. And who do not receive salary, like I said before, they don't have to contribute to unemployment insurance and also the accident insurance. The business managers, controllers, representative of business capital who don't receive salary, so they only need to contribute to type of insurance. And for foreign employees with labor contract over a year, from a year and above, they are just unemployment insurance is exempt. And what is the impact on the cost? With all these changes I mentioned, and the HSUI cost will definitely increase. And only when the foreign employees who reach the retirement age at the time of contract signing, the HI contribution slightly go down because they no longer have to require to contribute at that point. Okay, this is pretty significant, important in the new law. This is a compliance timeline. When an event occurs like new hire, salary adjustment, termination, something like that, we only have 30 days to report to the authority. And from the 31st and adding up 60 days, this is considered late reporting. And after that, it is seen as evasion. And with the late reporting will result in penalty, interest, and administrative penalty. But the evasion is stricter. It can be under prosecution of criminal liability. And how about the payment? The payment here for the statutory insurances. The due date for the payment is the last day of the next month, and adding up 60 days is considered late, and after that is the evasion. We recommended the time for contribution within the months that the month of the event, within the month, so it's pretty safe for the employers. Okay, now let's move on to the personal tax income updates. The current income tax was issued in 2007, which has been almost 17 years. And so it's definitely this is the time for the updates. Oh, sorry. Now we go through 5 main points. The expansion of taxable income sources, the additional tax-exempt income, revised tax brackets, revised personal income tax relief, and the last one is deductible medical and education expenses. Okay, let's see the first one, expansion of taxable income source. Yeah, like you can see in the digital era, we're living digital platform e-commerce are very popular, like Lazada, Shopee, TikTok Shop, Facebook live stream, something like that. You must have heard that. And now the law update that we have to pay tax for these form. This digital platform, e-commerce, transfer of digital assets like crypto, and auction license plate transfer, domain names, green bonds, and carbon credits. And for the tax-exempt income, we have there's some new categories of tax-exempt income, like they include the income earned by ODA and foreign non-governmental projects. And the scientists in innovative startup and high-tech sectors incomes from the first-time transfer of carbon credits. The salary related to scientific, technological, and innovative tasks funded by the state budget. And the last one is from the copyright and intellectual property rights arising from the commercialized scientific and innovative tasks. Okay, let's move to the revised tax brackets. As you can see, the current tax bracket have been applied for nearly 16 years with 7 levels. 1, 2, 3, 4, 5, 6, 7. Okay, and under the new law, it is proposed to reduce to 5 levels. There are 2 proposals and 5 levels here. This is we just add to see the difference, and the only this is the what we add to see the difference. 5 levels. Okay, in both proposal, the 10% and 20% are removed. Only 5, 15, 25, and 30 and 35% are kept. And the difference between proposal 1 and 2 is the income range. You can see, and the lowest taxable income is now up to $10 million, but still keep the tax rate at 5. In the past, it is 10%, and now it's 5%. It's reduced. Okay, the 30, the income from 30 to 80 rate applies to at the same as before. Same as before at 25 and 30%. And the 35 rates apply to in the first proposal, it applies to the over $80 million, and the proposal 2 is over 100. This is the difference between these. And we have an example to see. With the same salary here And in the proposed tax bracket 1, the PIT slightly down a little bit at this. And with the proposal 2, the figure is much more than that, and it means that you have more more money in your pocket. And for the income tax relief, the new law from the 1st January 2026, 2026, this is a new rate. The new figure for the 1st January 2026. And this is approved last Friday by the Standing Committee of National Assembly, and this increases the deduction by nearly 41% compared to the past, to the past figure. Okay, let's see an example. An employee with no dependent, the current earning 12 with the current tax relief, if they earning 12.2 million down, they don't have to pay any tax. And even though with the new tax relief, anyone with 17.3 million down, and they don't have to pay PIT. And the dependent, and if with one dependent, the salary with the current tax relief, employees with 70.2 million down, and they don't have to pay tax. And with the new tax relief, it increased a lot. So more employees don't have to pay tax with the new tax relief. And so it's the impact on the employees. Of course, you can see the lower tax we pay and the higher money we receive. So more money in your pocket for your personal purposes. And meanwhile, the company cost unchanged. Okay, that's a happy sign for the company while they ensure the life of the employees, but the cost unchanged. And now with the fewer tax brackets to apply, we will reduce the complexity in payroll administration. And last but not least, the deductible medical and education expenses. When the new law takes effect, taxpayers will be allowed to deduct medical and educational expenses for themselves and their dependents. Okay, and thank you for, that's all about my presentation regarding the statutory insurances and personal income tax. Okay, you want Kevin, go carry on.
Okay, so what we shared is what's in the law, right? So there's be a lot of questions. So let me just start from this slide and move back, and then after that we take a short break before we go to the next session. Okay, this one, deductible medical and education expenses. This is something very common in other countries, whereby the tax authority allow you to claim for medical insurance and education expenses, right? But the question here is education expenses. Can we claim the expenses if we send our father to go and study something? Or is this just for kids? We don't know, right? Can we claim for sending them to university overseas and pay billions of dollars? Can we claim everything? We don't know. So this is still in draft form. in my opinion, likelihood they would say in 1 year, maximum amount you can claim how much, and you must show receipts and so on and so forth. Okay, so that's medical and educational expenses. Let's see what the final circular looks like. Right. So now in terms of reliefs, right? The reliefs, what we share is basically individual that earns 25 million, they don't have to pay tax, which is a good sign, right? And in terms of the tax bracket, I want to look at the tax bracket. Okay. The tax bracket, the old bracket has got 5, 10, 15, 20, 25, 30, 35, 7, right? So now it's 5, 15, 25, 30, 35. So of course, everyone will be hoping that they choose proposal 2, right? Because it increased the threshold, the 35 threshold. In the past, is always at 80 million, right? Now the threshold that you need to pay 35 is at 100 million, okay? So I personally hope that they go for option 3, which will increase this to 200 million. But unfortunately, there's no option 3. And okay, this part here. What I want to mention here, right, is digital and e-commerce. So we all know that many people earn money in Lazada, TikTok, right? Even you do live stream, you get a lot of gift and you earn money, right? So now all these are subject to tax, and the responsibility to make the deductions will be the platform you use. Facebook, if Facebook pays you, they will do the deduction. Lazada might do the deduction, as well as TikTok. So it would be a direct deduction, okay? What is next interesting is digital assets. Okay, we have a law issued recently on digital assets. Okay, this could be well, commonly many people look at it as cryptocurrency. Okay, so the law has been issued for Vietnam, ideally within the next 2-3 years to establish an exchange, crypto exchange. And if they do that, it means that they might bar Vietnamese. Most of you have cryptocurrency, right? They might bar Vietnamese from using overseas platform and use only platform in Vietnam. So when that happens, then yes, the platform would deduct the tax. And to me, likelihood, it would be the same way that deduct the stocks, right? When you buy and sell shares, you have to pay 0.1% every time you buy and sell. So likelihood, I think they might do the same for cryptocurrency. Okay. So then here we have the government so-called drive towards green energy, whereby no doubt it will be taxed, right? But there are certain exemptions as well. And yep, so I think that's the quick few points I'd like to add to what was presented by Ms. Hui. Okay. And before that, we also have some questions from the audience, right? One of them is, does foreign employee need to contribute social insurance? No, need to contribute unemployment insurance. So the answer is no, because as what is shown by in one of these slides, right? Where is that? Okay, here. Foreign employees, there's no contribution of unemployment insurance. Only SIHI and SIAI. Social insurance artificial intelligence. So, and the other question is, does a director, right, a general director who is foreigner, right, who doesn't live in Vietnam needs to pay social insurance. So, where's that? So we back to that yeah. So these rules, right? Just to emphasize, this rule only apply for Vietnamese citizen. So if your company has got a general director, right, who a GD or legal rep that doesn't live in Vietnam, correct? So there is no requirement for them to contribute social insurance. Only for Vietnamese citizens. Before we restart the next section, right? Welcome back, everyone. On share ownership plans, right? I just want to address the questions that we receive online. Okay. One question is for social insurance contribution for management of company. How much percentage and which amount we need to contribute if they are not subject to receive the salary? So in the event that the management of the company, right, could be the general director or the director who does not receive salary elsewhere, and it's just a director in your company, right? Then the amount for contribution is up to the company and the individual. The minimum threshold we saw just now, 2.4, 2.34 and 46.8, right? Those are the max, those are the range that you can choose to contribute the social insurance and health insurance. So if the company is generous, then you can contribute 46.8 million as the base salary and pay 30%, almost 30% of that to the government and for the benefit of the director. Okay. In case the company legal rep is a foreigner, does the company need to pay social insurance for him from July 1 to September 30, 2025? Because from October, he is subject to internal transfer. So according to new regulation in social insurance, he will no longer have to participate in insurance. This is a little bit technical, but in a nutshell, right? Yes, if it's internal transfer, not under labor contract, right, then he's not subject to social insurance and health insurance. Employee A is a foreigner who serves as legal rep, receives salary at company A, while also business manager at company B without receiving salary. What type of social insurance is employee A required to participate in A and B? So on that, right, since he's getting salary from A, also act as the business manager in B. So based on the hierarchy we showed just now, right? So he will contribute salary where he receives, he will contribute social insurance where he receives the salary first, where he's full-time, okay? And then for at company B, no. So only company A.
Yeah, excuse me, Kevin.
Yeah.
So I would like to add a little bit on this question because in the question they asked the foreigner, the foreigner also being a business manager in company B without receiving the salary. So the foreigner doesn't receive the salary. So if they are Vietnamese, they just subject to contribution on the social and health insurance only. So there's no accident insurance for the business manager without salary. So it means that the foreigner in these questions, they just made a contribution in the first company, the company A only. And there's no contribution on company B.
Oh yeah, you're right. Because if it's a foreigner, right, the business
foreigner.
manager does not apply. only apply for Vietnamese citizen who holds position in a company. Okay. Okay. Let's go through the question later. I'll get my team to structure the response properly. All right. And we will go to share plan. There is no recent update. The last update was in 2024 on employee share option, share ownership plans, right? So commonly, we look at what type of share option schemes are there that is seen in companies introduced by foreign companies in Vietnam for their subsidiary, as well as for Vietnamese company as well. So the common one are share option schemes. Share option scheme means you are given a right to purchase a share at a fixed price, which is the exercise price. And when you meet the condition, then you are entitled to purchase that at the set price. Market price may be higher, right? But your purchase, so-called your entitlement price, your exercise price is fixed, okay? The other one is restrictive share unit. It's also common as free shares, but this RSU is restricted because there is always condition attached, right? These shares are given to employees, and if after they work for 1 year, then they're entitled to it. So that is why it's restricted. And some is also tied to performance, right? So especially head of the company that is sent over by overseas, if they meet the sales target, then they get the shares instead of cash. If they don't meet, then they get nothing. Okay, so these are the two common ones that in terms of share ownership plan that we see, right? There are others which would be employee share purchase plan, whereby employee purchase share at a discount through payroll deduction. So these are actually payment or deduction from the employee to the company. And these are not common for Vietnam. Bonus shares, right? Bonus share is also increasingly we see more, whereby employees receive shares free of charge, right, as part of their reward scheme, right? So these bonus share and restrictive share units are similar. They are free, but the RSU has got terms and conditions attached to it. So it's subject to restrictions. Okay, so now we look at commonly how is the whole process of ESOP, right? So the commonly would be the company overseas that would come up with a plan approved by the board. The whole scheme is put in place, right? And then they roll out to the company in Vietnam. Okay, so then when Vietnamese or employees in Vietnam as well as other countries, if they meet the criteria, they'll be granted a share. They'll be granted either RSU or an option. Okay, so these RSU and option are granted to you, which granted means it's not given to you. Okay, then normally there's a vesting period. I will give you this option or these shares, but you can vest. The vesting period could be 1 year, you can get 30%. After another year, you get 30%. So those are the vesting period that is commonly applied. All right. So now, once the shares, you have met the vesting period, the shares are indirectly yours, and you can exercise it. So there's two cases. You exercise it if it's a listed company, right? You can exercise it, meaning you exercise the right to own the shares. And at the same time, commonly is you exercise to sell the shares as well. So the exercise portion and the sale portion are commonly together, right? Why? Because you already own it. You don't have to buy and keep it in your pocket, right? Some custodian overseas will keep it for you. And when you exercise it, literally means you want to take the profits. Okay? So just a quick understanding on the common process on ESOP. So in Vietnam, Okay, ESOPs share plans are considered outward portfolio investment, meaning to say, I mean, mostly the employee share ownership plans, right? ESOPs are issued by foreign companies for the shares overseas. So by definition, these are considered outward portfolio investment, right? And in the common implementation, if the foreign entity implement it in Vietnam, the Vietnamese entity would be considered the implementing entity. What do you mean by implementing entity? So the implementing entity has to comply with the regulation issued by the state bank on how to manage, implement, right? And yeah, how to implement and manage the share plan, and it has to comply with the laws in relation to personal income tax as well as foreign exchange control. Now, implementing rules, 4 few points to highlight would be it's applicable for Vietnamese citizens. Okay, so if you have employees that is a foreigner, right, it does not apply, and you don't really need to manage that. And then when a foreign company issued a ESOP, okay, the implementing entity will be the subsidiary in Vietnam, okay, and they have to open a bank account. Meaning to say, if your mother company issue a ESOP for the Vietnamese employee, right, then the company has to apply a bank account specifically to manage this ESOP. Okay, so when you go to the bank and you say you want to open an ESOP account, the bank will review the agreements, the plan, and so on, right? And the bank will make sure money flowing in and out of that specific account relates to employee share ownership plans. Okay, and of course, the company has to adhere to foreign exchange control and tax regulation. Now, the regulation issued by state bank states that this ESOP, right, no money is allowed to transfer overseas to buy the shares. Okay, so which means to say for employee share purchase plans, right, is cannot be implemented in Vietnam. The RSU as well as share option scheme, right, which does not involve any outflow of funds overseas, right, can be implemented. Okay. Now, changes from August 2024 is in the past, right? There is only one type of ESOP that is stated in the regulation, which is bonus by option with preferential terms. So these are bonus by option with preferential terms. So from 2024, right, it already have two definitions. That means direct bonus shares and other share award without outbound cash flow. So again, right, it spells out without outbound cash flow. So it means that overseas company can issue bonus shares as well as stock options. Okay. Now in the old law, all ESOP scheme in Vietnam, the Vietnamese company who is the implemented entity has to register with the state bank. Now they do away with the registration. So it makes it easier, right? You want to implement any point in time, you just implement it. Don't have to go to the state bank and submit application and get their approval. Or they'll review your agreement and then they'll review the plan and they might have a lot of questions, right? So now you can just do it, and it's almost as good as they let you do it. Okay, you must study the law, you know the law, don't break the law. In the event you have a little bit of non-compliance, then they come and fine you. So that's how it is in Vietnam. It's very much self-implementation, self-assessment, right? And yeah, self-governance. Now, what is required? I mentioned bank, right? You must open a bank. The other requirement is you have to submit monthly reports. Monthly report to the state bank. After you implement the share option scheme, right? You don't need to register, but you still need to submit monthly report to the state bank, right? It comprises of the amount. Basically, the requirements here is if there's any dividend received from overseas, you got to report to the state bank, right? And other income relating to the share options plan. So in the event employee decides to exercise the share option, right? There will be funds coming in from overseas for the sale of the shares, and it has to go through this account, right? Then it goes to the employee. So in that case, those kind of movement of funds has to report to the state bank. And of course, documents that you have to maintain in the event you have been investigated or reviewed by the state bank or by the tax authority, right? You have to have the share option plan in place, as well as proof of relationship between the issuance and the Vietnamese entity. Okay, and this is important also for tax purposes. Now, when we look at this, right, this is important for tax because at times, right, when a company in Vietnam, the employees get bonus shares or share options, right, it's a cost to the head office. So it's common that the head office will charge those costs back to the Vietnamese entity. So in that case, issues such as corporate income tax, withholding tax, transfer pricing would come in. Okay, because when the Vietnamese, say the employee in the Vietnamese subsidiary gets a free share, right? Somebody has to pay for it, and it's paid by the holding company. So this cost is commonly that they will charge back to all the subsidiaries, right? And then when it comes to Vietnam, then there'll be tax issues as well. Okay. Now, what about on the employee side, right? Not the company. For employee side, when they receive a grant, right, it is not a taxable event, so they don't need to pay tax, right? If they exercise it, they don't need to pay tax, but when they receive the funds, receive the money, right, then they have to pay tax. So it becomes a taxable event only when you see the money. So it's interesting. The tax authority will come and collect money when you have money, right? When you don't receive any money, they won't come after you. Okay, now what is the value of the amount that is to be taxed? All right, for share option scheme, right, it's actually the difference between the option price and the market price on exercise date. So you are given an option to buy at $5 or $50,000, right? When you exercise, it's $100,000. So there is a profit of 50,000, right? So you pay tax on that 50,000 because that is the amount that you receive in the share option scheme, right? For RSU, the moment they give it to you, right, the value that is recorded in the accounting books is considered, because it's free, there's no cost. So the value is considered your employment income for the employees. So we are focusing on the employees now. All right, so of course that is first part. Second part is when you sell, right, it is considered a transfer of securities. So under the PIT law, right, when you buy and sell securities, you are subject to 0.1% tax. Okay. Example, right? We have a share grant value is 10,000, right? Market value at vesting is 20, right? And it's then the exercise and at 30,000. So the amount that is treated as employment income would be 200,000, which is the value after the vesting, right? And the difference, and when you sell, the full amount will be subject to 0.1% as a transaction tax on transfer of securities. All right, just highlight a bit here, practical ESOP consideration. Hopefully, you know, it's a good tool for staff retention, right? And if you have ESOP, then your team will stay with you longer. They will work with the company to build the company in the longer term. Okay, these are common knowns. What needs to consider is the PIT. When a company has got ESOP in Vietnam, right, then the HR has to be diligent in managing this and ensuring that the taxes, the PIT, are paid appropriately. Otherwise, there'll be fines and so on. All right. Okay, so that wraps up on ESOP. What I want to share a bit more is we talk about the recharge from the head office back to the subsidiary for the cost of the ESOP, right? So in this scenario, right, the Vietnam subsidiary must maintain a document relating to the charge, must have proper reconciliation between the fund received from the exercise of the ESOP and payment to the employee, must prove that they have deducted the appropriate tax to the employees, right? And there should be an agreement between the head office and the Vietnam subsidiary for the recharge in. Okay? So it benefits the employee, but there's still a lot of work. Otherwise, the tax authority might disallow the expenses. Okay, then it costs the company 20% just to give benefit to the employee. Okay, that wraps up my ESOP session very briefly. All right, thank you. And I will have Tracy, Phương Nguyen, who will share the last session.
Morning, everyone. Thanks, Kevin, for your introduction. So I'm delighted to be here today to give some insight on the HR budget planning and how HR team can prepare in responding to the recent legal changes in Vietnam to continue to support the company business goal. So for HR team to plan ahead and build a strong, solid HR system to maintain the HR operation and also to continue to improve the HR operation efficiency. So now let's go with the first part is the payroll budgeting. Payroll budgeting, the first part we should consider is the headcount planning. For the year 2026 coming, it's important to forecast how the company's workforce may change in the coming year, including the new hire, promotion, tentative turnover rate, with the company's business goal, and a hiring plan with a timeline and recruitment costs should be considered to be included in the budget. The second part is the base salary adjustment. In order for the company to plan for the salary increase percentage, it's important for the company to consider these factors. The first one is the increase on the regional minimum salary, which will be which is proposed by the Vietnam National Wage Council to be increased averagely by 7.2% from January 2026. And the second part is the CPI rate. Vietnam CPI in projection in the year 2025 is between 4.5% to 5%. The third factor is the market-based salary adjustment. So it depends on the company's industry. So the companies should select the appropriate increase rate based on the industry benchmark for the company. And the next factor components in the payroll budget is the statutory insurance contribution. So it's important for the company to keep in mind there's a change in the social insurance law from July 2025. So there will be new participants groups in the social insurance. Those are the part-time employees, non-salary business manager, and salary manager. So if the company has any individual in those groups, they should include the company's contribution portion in the company's cost. The fourth components in the budget is the bonus, allowance, and benefit. In the context of the CPI, in order for the company to stay competitive in the labor market, so the company should consider to review and adjust the bonus, allowance, and benefit amount in the context of the CPI of Vietnam in projection between 4.5% to 5%. So, such as the allowance in transportation, meal allowance, uniform, parking, so the company should consider if there's a need in an adjustment for those allowance. Important for the company to estimate the overtime cost in case the employees in the company regularly work beyond the standard hours. It means more than the standard hours for 8 hours per day, and even they work the overtime more than 200 hours per year, and they are eligible for overtime payment. And the next one component in the payroll budgeting is the compliance buffer. It means that we should have a budget for any unexpected costs or expenses, including, for example, the consulting fee, advisory fee for third-party vendor, for any late payment or interest, any penalty, and any PAT gross-up support for the employee expense. And last but not least is the PAT changes, because we already know that there's a change on the PAT brackets and the tax relief already confirmed by the government. So in case the company has any agreement on the net income or the net benefits for the employees, so we need to reflect those changes on the PAT for the net income to ensure there are no arguments on the agreement with the employees for the payment. So Vietnam is a dynamic labor market, and there's labor movement in Vietnam seem very high, especially in the IT, the retail and service sectors. Turnover rate can be up to 20% or 25%. So in dealing with the uncertainty in the labor market and still ensure to align with the company business goal, we have outlined here the three payroll cost scenarios for the company to consider to apply for your organization. The first one is the scenario A. This is the conservative plan, and it's a baseline payroll cost plan. it can be considered for a low growth organization. In this plan, we assume a minimal changes in the coming year. That is the stable headcount, and the company may apply a minor salary adjustment just to comply with the requirement by law on original salary minimum changes, and to ensure the increase meeting the CPI or inflation rate. And we can incorporate with the confirmed legal changes on the personal income tax, personal tax relief, and we may apply the current PAT brackets with the 7 levels. And in the scenario B, this plan is considered for a moderate growth organization. The headcount growth is only 5%, and the company may apply the market-based salary adjustment. It is just a recommendation. We also may apply a minor change on the increase based on the inflation rate. And we incorporate with the confirmed legal changes, which are the new personal income tax, personal tax relief, and the PAT bracket adjustment. In addition, we can include the adjustment for the benefit, bonus, and allowance with an alignment in the CPI increase 4.5% to 5% for this year. Scenario C, this is an aggressive payroll cost plan. We may consider there's an increase on headcount, which is 10%. And we include the promotion, include the market-based salary increase. We apply the social insurance change, the new participant groups, part-timer, salary manager, non-salary manager, and we update the salary caps for the social insurance, health insurance when there's an increase on the regional minimum salary, and there's an expectation on the increase on the monthly base salary, which is the reference level. So the HR team may include the HR investment activity, such as the cost for the PD to comply with the personal data protection law, which will be effective from January 2026. And the other one is that the company may consider the electronic labor contract to be implemented in the organization. That will be presented in the following part. Another thing is that in order to improve the employee engagement and enhance the staff retention, the HR team may also need to consider any training and development costs. So beyond the legal update, the HR team also needs to consider how to enhance the operation efficiency. So here we will talk about the HR transformation, and which is the solution or option that the HR team can consider. The first part is we will talk about the digital transformation. Back to the operation in the HR department, we can see that HR department is a people-centric function, and they are in charge of a wide responsibility from managing employee record, from payroll report, compliance report, and also labor contract. So there are so many paperwork and printing documents. So that's why a practical way to improve the efficiency in the HR department is reducing the paperwork. And reducing the paperwork, that is where the electronic labor contract comes in. And it's easy to see that there's a lot of practical benefits in applying the e-contract here. So firstly, we will talk about the legal validity. In other countries, electronic labor contract, or we also call e-sign or digital signature, may be popular in other countries. They can use DocuSign, AdopSign. However, in Vietnam, those signing are not valid, are not acceptable by Vietnam government. So in Vietnam, we only accept the digital signature, which is provided by a vendor licensed by the Vietnam authority. So please keep in mind to apply the correct digital signature for your company. And more companies in Vietnam are adopting the electronic labor contract is in their digital transformation journey. Back to the practical benefits for the e-contract, it's easy to see that the electronic labor contract in apply in the company, it will support the HR team to proceed with the onboarding process faster and saving the cost in printing, courier, and storage. And also can reduce the paper printing so we can save the environment. The other one is that it can support to have faster hiring and flexible in remote hiring. For example, the company in Ho Chi Minh City, so we can hire a person in the north, in a far place. And the electronic labor contract also ensure the compliance and security in handling the labor contract in the company, because the digital signature can provide a time stamping, and it keep track the time and place when the signer signed the contract. So it's to ensure the compliance and the authentication of the contract. The second solution for the HR team transformation is that applying the automation enhancement. So as I mentioned earlier, that the HR department now they are handling the payroll process, and it consumes a lot of time for HR team to enter the data and review and follow up. So it takes a lot of time for the HR team to process the traditional payroll process. So that's why we recommend the automation enhancement option is utilize and investing the payroll software. A modern payroll software can be integrated with the other HR function in the HR team, such as the e-leave management, time keeping, tracking, overtime registration, and expensive reporting tool, and e-payslip management. So in implementing the payroll software solution, the company also can ensure the accuracy of the payroll, ensure the consistency in calculation, and still compliance with the law when we apply every formula in the system. And how about the case if the company has not enough fund or capacity to invest the payroll system? So that's why we also recommend another one. This is an alternative solution, which is a payroll outsourcing option. In the payroll outsourcing service, the service provider already have the automation ready system. The system here also available with the e-leave management, e-payslip, expenses, reimbursement, reporting, and so everything is ready. And when we work with the trusted payroll service vendor, we can increase, we can reduce the non-compliant risk. It means that we can reach with the HR expert to give any advice. The HR team with a solid experience and practical experience can support the company to handle any ongoing routine tasks and also the complex issue when the company has. The other thing is that the time saving and cost saving. In fact, the HR team, they should spend the time in the staff development and training and employee engagement. So if they outsource the payroll process to the outsourcing to the third-party vendor, the HR team, the HR consultant team will deal with any changes in the regulation, any changes in the compliance report. So they will support the HR team internally to save the time. And in fact, in the there's also a change, the movement in the HR persons. They come in and they leaving. So there will be a change on the person to be in charge of the payroll process. So that's why when we outsource the payroll process to the third party, they ensure the continuity of the payroll process and to keep the stability of the payroll operation. And so many benefits on using the payroll outsourcing here. So in case you would like to understand has any issue, so please talk to HR team in Aklam. We have talked about the bonus. We have talked about the HR budget planning and any solution for the HR transformation to improve the HR team and HR operation efficiency. Now we're back to the action plan. How and what we can prepare for the coming year. First, we will talk about the compliance, where there's an update on the legal changes on the social insurance law. The first part is we will review on the service contract or freelance contract to ensure those contracts, if they miss the legal definition of the labor contract, they will be subject to the contribution of the social insurance, health insurance, and unemployment insurance. The second is that we will review the part-time contract and income to ensure that we follow up on the necessary contribution. And we also need to review the participants who are the non-salary or salary enterprise manager. And after we define and we identify who are the correct participants. So we need to monitor the submission of the social insurance report to ensure the reports are submitted timely, and we make the payment timely to ensure there's no penalty on the late reporting, on the late payment. The next point is that the foreign employees. So we already know that when the foreign employees reach retirement age during the labor contracts period, they will continue to contribute the social insurance and health insurance until the contract ends. So we should monitor the retirement age of the foreign employees in the company and also the contract expiration. The second part is that we suggest the company to have an overview on the employee data management and also the company policy. It means that with the changes on the task on the social insurance, we need to update the payroll template. We need to review the net income agreement in case the company already have existing the net income or benefits agreement with the employees. And we reviewed the HR policy, procedure, and forms to ensure those are meeting the requirement to select the only required information from the employees in line with the employment law and the PDP law. And we review the database of the employees. We review all the existing procedure in the employee management. But not least, that is the tax dependent eligibility. The year 2025 is coming closing. So now is the time for the company to review the tax dependent registration form on the supporting document to ensure the tax finalization process will be accurate in March 2026. And also for the new year 2026, we need to ensure all the tax dependent will be registered correctly. So that's all for my sharing on the bonus on the payroll budgeting and action plan for the HR team to prepare in responding to the recent legal change relating to the social insurance, health insurance, and the personal income tax. So we can see that the year 2026 is the year with a lot of opportunity and challenges. The challenges for us is that we need to monitor any change on the compliance, on the regulation, and the opportunity is that we will receive more net take home when we apply the new tax bracket and the new tax relief. And Kevin, so I hope you can support to have a key takeaway, to have a summary for the audience. At this moment, if you have any question, please put your question in the chat box or you can write on your paper and then you can give to Aklam team, supporting team here.
Thanks, Tracy. Okay, thank you everyone again for sharing the 1.5 hours, almost 2 hours of your time. I appreciate it, people here and as well as online, right? Quick wrap up is, as I said in the beginning, right? There is a lot of so-called transformation in Vietnam this year, from VAT, value-added tax, corporate income tax, as well as the social insurance and personal income tax, which is a positive direction. And 2025 is the last year of the Vietnam government's 5-year plan, right? We would want to see what is the next 5-year plan, right? And it will be interesting to be able to foresee what's going to happen in Vietnam in the next 5 years. But whatever it is, as a adopted Vietnamese here, right, I feel it's going to be very positive for Vietnam. Key takeaway from this session would be, the HR has to review and see. There's a lot of things to review in light with the new law, right? For part-time workers, right? And also a lot of things to monitor if you pay people based on short-term contracts and so on, right? And then your systems and your payroll system, if you maintain it internally, you have to update the tax rates. Hopefully it will be approved, announced before end of the year, so that companies have time to maintain and update their payroll systems, right? And of course, then we thought update the tax rate plus the deductions, okay? Then of course you have to look at the your dependents, right? You should review your dependents now to see if there's still that you have been claiming this year for your employees, whether they still qualify for next year or not, right? And then, of course, finally, what sort of mechanism you need to put in place to, if in case employee wants to claim deduction for education or for medical, right? So these are things that from the HR perspective, right, you need to plan ahead. And yep, that's it. We probably will do a few Q&A, right? Tracy will manage the Q&A. And where we don't address your question, right, we will definitely give you a response in writing. Okay, Tracy, are you ready? Yeah, yep, you can wrap up.
First question, I will read the question here so that everybody can understand. The first question is from Ms. Mai Phạm. According to Committee Article 31 of the Vietnam Enrollment Law, 2025 managers of enterprise who receive a salary are subject to unemployment insurance participation. Therefore, I would like to ask whether an enterprise manager who receives a salary is also subject to unemployment insurance participation. So for the foreign employees or foreign manager, they are not subject to the unemployment insurance. If they sign a labor contract, they are subject to social insurance and health insurance only. And the labor contract is from 1 year or above. Lao động thời vụ. Nếu lương tính theo giờ và thời gian không cố định, dẫn đến lương thực tế các tháng khác nhau, và đến cuối tháng mới biết thì sẽ báo cáo bảo hiểm và đóng bảo hiểm thế nào? First, if wages are calculated by hour and time is not fixed, leading to actual wages being different each month and only known at the end of the month, how will the insurance be reported and paid? So for part-time employees, we need to report to the authority based on the actual amount per month.
Sorry. And in case we don't know the exact amount until the end of the month, we may report later as long as it's within the allowed time. It's been 30 days for the reporting. So it's recommended to report on the last day of the month because the part-time employees already work for the company, assume it's from the first day of the month. So within 30 days, so we should report by the end of the month. In the month of 31 days, so we should report on the 30th of the month. And when reporting to the Social Insurance Authority, we need to note in the column part-time so that the officer can be aware of the changes for this person. To number 3. Question number 3 is from Mr. Kudo, Social Insurance for General Director, who is non-Vietnamese and live in abroad. Do we need to apply for social insurance? Live in abroad. So this foreign manager, if they don't sign, if person doesn't have any labor contract, so we don't need to apply for social insurance. Question number 4. For the social insurance contribution for the management of the company, how much percentage, which amount that we need to contribute if they are not subject to receive the salary? Management of the company. In case the management of the company here is the Vietnamese, and they don't receive any salary, the salary base for the contribution is between the minimum threshold and maximum threshold. The minimum threshold is now 2.34 million Vietnam dong, and maximum threshold is now 46.8 million Vietnam dong. And the contribution rate is the social insurance is 25% and health insurance is 4.5%. So the total percentage is 29.5%. Question number 5. Đối với trường hợp người đại diện theo pháp luật của công ty là người nước ngoài, thì trong thời gian từ 1 tháng 7 2025 đến 30 tháng 9 2025, công ty có cần đóng bảo hiểm xã hội cho ông ấy không? Vì từ tháng 10 2025, ông ấy thuộc diện di chuyển nội bộ, nên theo quy định mới của luật bảo hiểm xã hội, sẽ không phải tham gia bảo hiểm nữa. In case the company's legal representative is a foreigner, does the company need to pay social insurance for him from July 1st to September 30, 2025? Because from October 2025, he is subject to internal transfer. So according to the new regulations of the social insurance law, he will no longer have to participate in insurance. So for this case, we need to know if this foreigner is signing a labor contract, and the labor contract duration is from 1 year or above. And if that person is at retirement age or still in the working age. So more information will be required to identify this person is subject to social insurance or not. Question number 6. Employee A is a foreigner who serves as the legal representative and receives a salary at company A, while also being a business manager at company B, but without receiving salary. Which type of social insurance is employee A required to participate in at company A and B? So this question was answered by Kevin previously. So this foreigner needs to contribute at company A in case he signed a labor contract with a duration from 1 year or above. Question number 7. Does foreign director with no salary need to contribute social insurance or PAT? PAT is, of course, because they work for Vietnam. They have a Vietnam income source, so they are subject to the PAT in Vietnam for that income source. And in case that foreigner is a tax resident status according to the personal income tax law, this person also needs to declare the worldwide income with the Vietnam Tax Authority. And he is not subject to contribute to social insurance because the non-salary business manager is applicable for Vietnamese only. Question number 8. In case where allowances or support payments, for example, transport allowance, phone allowance, midship meal allowance, housing support are listed as separate items in the labor contract, the company regulation or in internal policy, and are paid regularly and consistently in each payroll cycle. Are these amounts subject to inclusion in the monthly salary used as the basis for compulsory social insurance contributions under current regulation? So this question is very clear that the allowance or support payment indicated in the labor contract in the separate items. So they are not subject to the social insurance because there's an official answer from the social department of wage. Không, cái đó là của công an mấy 198 em có ghi đây. Excuse me, so I would like to view the number of here. Yeah. So for any allowance or support payment already indicated in separate items in the labor contract, and here according to an official letter number 1198 from Department of Wage and Social Insurance under the Ministry of Home Affairs, these allowances are not required to be included in the salary base for social insurance contribution. However, when we join some conference or seminar in Ho Chi Minh City, Social Insurance Office, there are also a different opinion. They say this item should be included in the salary base for the social insurance contribution. So we recommend the company should submit an official written letter to the social insurance authority the company is reporting to receive an official answer, because it should be the company's social insurance is managed by a specific social insurance office, so we should get an official answer from that relevant office. Question? So that's all the questions from the online audience. How we can proceed to use the e-signature for Vietnamese? Question number 9. So for this question, how we can proceed to use the e-signature for Vietnamese? The company needs to get its own digital signature. That is for the company side. And they can choose a service provider that offer electronic contract signing and use their software to carry out the signing process. For the labor contract, employees can sign in different ways using personal digital signature or by entering an OTP one-time password sent via SMS or email. For the employees, we recommend to use the digital signature, which is provided by the service provider. So it will be secure and legally valid in, in applying for the labor contract. Question? Yep. So the time's up. So here we can finish the session for the seminar. So for the remaining question, we will reply via email for the audience. Thanks everyone for listening to us.